Are you able to recognize this video clip?
चलते चलते यूं ही कोई मिल गया था.
She was considered as one of the most successful Bollywood actress of her time. She was known as the Tragic Queen. Well, she is Meena Kumari. In her career of 33 years with 92 films and numerous awards for the best actress, she has died at the end of her career almost penniless and was unable to pay her bills. There are several examples from the world of sport as well, like Mike Tyson, who filed bankruptcy and has poor money management skills. Similarly, Diego Maradona, who almost died penniless at his end of a career. Welcome to today's video, where we're going to talk about some of the critical financial lessons one must avoid. I would urge to understand and note these points, as this can be the game changer of your life. Let's start with the number one lesson. The point number one is that it is absolutely critical to invest your money. If you don't invest your money, it will keep lying in the savings bank. Either it will get eaten up by inflation, or you will end up spending in non-critical stuff. Hence, it is important that you direct your money so that it creates a parallel stream of income and helps you create wealth. Investing is as important as earning. You have worked hard to earn. Now let this money work hard to earn for you. The second most important point is that your investment should beat inflation. Before we deep dive this point, let's understand what inflation is. Inflation is the general increase in the price of goods and services. For example, you have 100 rupees in your bank account and you have to purchase 100 rupees of medicine. Today, you can use this money to buy medicine. But for example, say next year, after a period of 1 year, your bank account will increase from 100 to 103. Say you parked in savings bank and you earn 3% interest rate. While the cost of medicine goes up by 10%, due to inflation, what you are purchasing at 100 rupees, next year you have to pay 110 to purchase the same medicine. So what will happen? You have 103 next year in the bank account and you have to spend 110 rupees. There will be shortfall in the purchasing power. So next year your purchasing capacity will reduce and will not be able to fund your medical expenditure. So it's very important that understand the concept of inflation and make sure your investment beats the inflation so that your wealth grows. The point number three is that we make mistakes, that we don't buy life insurance early. As you are younger, if you invest earlier in an insurance policy, the cost will be considerably lower, as the liability for the insurance is less at a younger age. You will have a lock-in at a lower premium. The number four, the point is managing your cash flow. I'll give an example. For example, you have an EMI for your housing, car, etc. 1 lakh rupees, and your monthly income is 1 lakh, and you will have additional 50,000 on your monthly expenditure. So net you have an inflow of 1 lakh and outflow of 1.5 lakh. So you are in a cash flow of 50,000 negative. In case of a tough or any kind of emergency situation or a job loss, you will not be able to pay your bills on time because you have a negative cash flows. Your inflow is less than your outflow. Hence, it's important that you manage your cash flow in a way you are able to meet your needs. Essentially, in a tough scenario, you might have to sell your assets at a distressed cost, or stressed assets will always fetch lower than the market price. So cash flow is very important. Finally, the point number 5 is that we need to set the financial values and vision. Once financial values and vision helps us to remain committed to our goals, and we are more likely to achieve our goals. Hence, it's very important that we simplify our finance and set the directions where we want to go. I hope you liked the video. If you did, please subscribe or like this video. And I see you next time.